Well, good morning. Today is Wednesday, October 9th, and it's about 7:17 Eastern Time. The market's going to open up in a few hours. I'm a little early today, and I'm a little overdressed, as you can see here. I'm actually about to go to a video. We're going to be doing some shooting today. So I need to get out of the house earlier, but I'm a man of my words, and I said I would do this video every day, and I'm going to do this video every day. And I want to tell you what I'm looking at right now. As you can see here, again, we're squarely in the middle of the trading range between the 50-day moving average and the 200-day moving average. The bond market is rallying. It looks like it's rallying. And I told you a few days ago that it looks like we're going to go choppy unless we're going to bounce hard. And we haven't, as you can see right here. It looks like we're going to be doing part 2 of what we saw in August right here. Keep your eye on the bond market, especially today. We're going to have FOMC today at 2 o'clock. There's a high chance the Fed's going to talk about lowering rates again. If that's the case, we're going to see upside on the bond market. All right? There's no way to avoid it. Lower interest rates means higher bonds. They're inverse of one another, all right? In terms of the overall stock market, I want to show you this. I want to show you this because should be a rude awakening. This is the Russell 2000. This is stocks that have a market cap of about $2 billion. And these are stocks most impacted by China compared to large S&P companies. Notice we're like literally at support. RSI is oversold. Haven't gone anywhere in, let me show you a longer term chart. We literally haven't gone anywhere except maybe a little bit down here, but we've been going sideways. And here's the problem. Most traders are looking at the S&P 500. The problem is the S&P 500 is a capitalized weighted index. You've got to look at stocks that are smaller to get a better idea of what the overall stock market's doing. Now, in light of what we're seeing right now, look, this is below the 200-day moving average. This is kind of just going choppy, waiting for some resolution with China. It looks like we're going to be coming up. But my point is this. Till you see this index start trading above the highs around the 160 level, it's going to be very, very hard to see the S&P 500 trend higher, anything beyond this type of a trading action. And that's a problem. Because everyone's focused on the S&P 500, on earnings, on seeing what the market's going to go next few days or next few weeks, on whether China and US are going to resolve. I want to show you something. This index made a high, all-time high, 1 year before the S&P did. Look at the S&P. Let me show you this. Look when the S&P made an all-time high. August, around the end of August, right? This year. Look when the Russell made all-time high. A year earlier, like September, 11 months earlier, all right? That's telling us that this index, the small caps, they're much, 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 much more sensitive to what's going on in the world right now in comparison to the S&P 500. Sorry, I'm going back and forth, but I want to explain this to you because this really is important. So, what you're looking at right now, this index right here that's not really going anywhere has a huge influence on this index that's trying to go anywhere. It's like, this is like a bird that's trying to fly, but it has a broken wing. And this is the wing right here. Until this starts climbing like this, we're not going to see that trading action, that like trending action out of the S&P 500. It's virtually impossible. So keep your eye on the small caps. And here's the good part. Just as they made a high much, much earlier than the broad market, this is going to price in China a long time before the S&P does. That means just as this made an all-time high, we're going to go back up because this is already pricing in the worst. This is much more speculative. The more speculation the index has, and this has a lot of speculation because it's a smaller cap index, the more upside, the faster it'll react, the more speculative it'll react. It'll perceive the news long ahead before the S&P 500 does. Just as you saw here, it knew bad things were coming in September of 2018. whereas the S&P all the way up here. So you have to keep your eye on the small caps, because without the small caps taking off, making highs, it's going to be hard for the S&P 500 to fly higher. Imagine the S&P right now is a bird with a wing that's busted, that's in the cast. And that's the small caps. I wanted to show that to you. I haven't shown you the small caps in a while, but you got to look at the broad market as a whole. Now, in terms of put to call ratio, we're neutral right now. So the market's not stretched out, which is not a good thing, because when it's stretched out, it means there's more chance for higher momentum. Not seeing it right now. That's telling me that there's a good chance the S&P can stay fragmented and just kind of stay in the 200-day moving average, much like it did in August. Now, does that mean the S&P is going to turn bearish? No. It means we're probably going to be in a wait-and-see mode for a while longer. Keep your eye on the Russell 2000, ticker symbol IWM. When this sucker starts moving up, really up, that's when you can expect a major trend to begin in the S&P 500. Till then, stay defensive. Gold, GLD ticker symbol, bonds, ticker symbol TLT, utilities, ticker symbol XLU. Look at this utility sector. It's making new highs or near new highs right now. So you want to be defensive. Consumer staples, consumer and utilities, and bonds and gold. You don't want to be speculative, buying tech stocks, picking lows right now. Don't do that. Don't do that till you see the Russell 2000 start trending like this, not literally sitting in the middle of the 50 and 200-day moving average. All right, I've said enough. Keep your eye out at 2 o'clock Eastern time, 11 o'clock Pacific time. We're going to have Jerome Powell. He never gets tired of speaking. We're going to have FOMC minutes. If he's going to talk about weakness, bad things, the more bad things he talks about, the higher the odds are that he's going to lower rates later this month or next month. If he starts talking about better things, economy sprucing up, stocks trending, I don't think he's going to go that way. But if he does, that's not going to be positive. Everyone's expecting him to be Grim Reaper today. I'll talk to you guys soon. Take care.